Hey guys, welcome to the Trade Genius Podcast. Bob and Phil here as always. Guys, I know the market is up a lot, but you guys need to understand what is coming down the pipe. We're going to talk about that in today's video and show you some charts. So let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
Well, Bob, buy high and buy higher, I guess, is the theme right now in the market. But I think we're getting a little bit stretched. What say you?
Yeah, and today we're not really going to be so micro. We already kind of told you our viewpoint between now and the end of the year. But the way this market keeps drifting higher, they may front run this whole rally for the end of the year pretty quickly here unless they get some sort of pullback. But we don't want to talk about that. I want to tell you something that's absolutely astounding, is that this is the SPY overlaid a ratio trade over TLT, which is basically the 20-year bond yield. And we literally, the two horizontal lines that you see, Phil, that are kind of turquoise, is that's the top of the before the 2008 crash, and the other one was the top before the COVID crash. And the reaction off the COVID crash was nothing short of spectacular. They basically blew up the bond market. And at the same time, they threw everything and their brother into SPY. And now we're at a ratio of 5-to-1 SPY over TLT, when over the last 200 months, closer to 2 as an average. And this is unsustainable. This is what blew up all the 60/40 funds this year. But you're getting to a price now on these long bonds. Today did a 20-year auction, and it was completely absorbed.
Right.
So people are starting to say, hey, you know what, this is a pretty good yield. And before we came on, I was telling you that TLT has a buy right ETF that's essentially yielding 12%. And all you have to do is own it. And it's starting to cycle into an uptrend as well. So there's a big problem here. And look how steep this is. This is what's known kind of as a Sornet wave. These are ending moves. This is the point of ridiculous. Yep. This is what might happen to SPY here over the next couple of weeks, where we just get a straight up move for another 150 points, where you and I will sit here every day on the podcast shaking our heads about how ridiculous it is.
Right.
And then literally in 3 or 4 days, that entire Sornet move of multi-months will get wiped out. And that's why we're cautioning everybody here, Phil, because I'm worried that people are going to start getting nervous and FOMO if they still have cash. I've been drawing cash out here last couple of days, and by the end of this week, I'll only be 70% invested, and the things that I own will all be paying dividends. So I'm a little nervous, but let me show you TLT if I could before I throw this thing over your direction. This is TLT looking back over the last couple of years, and when this thing gets pushed down, and this, all I did, Phil, was take the range breaks of the vol stop. Okay, nothing fancy. And when this market breaks the vol stop, which is essentially all really the vol stop is really a range break, right? So if you notice here, these moves have been averaging 30-35% on each of these moves. The last one was the biggest one, that was the COVID, and then this big massive reversal in TLT. But we're starting to get support down here. 84 held, then 88 held, and now we're over 90. And we have gaps to fill up to 93, 94. I have a measured move up to 95 on this, Phil. And if people start tasting this and saying, hey, I don't have to really take any volatility risk, I'm getting paid out a nice dividend on TLT, and also I'm getting capital appreciation. Going into next year, they rebalance. This could really take off.
Yeah, and I think that when we have a situation that we have with, say, SPY TLT, where it's going parabolic, one thing you have to understand about parabolic rises or Sornet waves, however you want to characterize it, is that they don't end sideways. Okay, they fall right back out of the curve that they're in, right? So you could draw a curve on this chart sloping upwards aggressively. They fall out of that curve, they lose that structure, and it's more of an Eiffel Tower effect. And that takes time to play out. But the initial move out of that is a rapid decline. And that's typically what you're going to see going into recession. So it goes back to, are we going to see a recession? Well, that's where I'd like to segue into this chart here, which is the Conference Board Leading Index. So basically, it's leading economic indicators, the basket of indicators that looks at various different things, cost of goods, cost of manufacturing, things like that, manufacturing output, and they come up with their leading index or the leading index for the economy. And what we're dealing with now is this chart here highlights how many consecutive months we've had declines in the LEI, or the leading economic indicator index. And we're up to 19 months now. So, we're right up there with all the other recessionary prints. And in fact, we're getting into some historically high consecutive months here. And typically, this is where we will see, recessions being technically hit, or technically recognized, I should say, in the next quarter or two. Here's some stats on this as well. So declined for the 19th consecutive months. In 2008, there was 24 consecutive months. And the only other one that was up there was back in the early 70s. We had 22 consecutive months. So we're really, really getting up here, dwarfing the dot-com boom and bust, and we're dwarfing the great financial crisis run. This was, like I said, only exceeded by 2008 and the 74 recession period. Now, recession triggers when the growth rate of the LEI falls below minus 4.5%. In October, we had a minus 7.3%. So in terms of the LEI, we're in a recession. And it's the 13th month that we've had this recession trigger level print. So really dismal in terms of deterioration in economic output that we're having in this country. And so basically at this point, jobs is the last thing to go, Bob. So I think that's what we really need to key in on here, is the job numbers, unemployment numbers, and see what the trend starts to become with claims and unemployment rate. We get those numbers weekly on Wednesday and Thursday, depending. This week, I think, is Wednesday because of the shortened week. But, we got to look at those numbers. If they start to increase, then I think we start segueing into bad news is bad news for the market. And you might be right that they front run the Santa rally and putting in a high in November versus December. And then we get more of a pullback, maybe an echo bounce into January. But then I think in earnest, we started decline into March.
Yeah. And one thing you mentioned to me when we were talking during the trading day today was that, if we have a strong week this week, the following week should be weak. And that
Right.
makes sense because all the stocks that have lost money for people, if they still own them, they're going to dump them so they can take the capital loss, because there's a 30-day wash sale rule.
Right.
So that last week in November tends to be a little bit to the weaker side because you start dumping the losers. And so we're going to have a little bit of that headwind. I don't know how much the Mag 7 are going to be able to help it. Apple filled their August gap. As long as it stays under $200, I win my free drinks at our training event. But it's pushing back up to 191. I said in August, I said Apple's hit its all-time highs, and now it's almost gonna make a liar out of me. But it filled the gap. I think was today Monday. I think it almost touched it Thursday. It definitely filled it today. So these guys are all and look at Netflix, Phil. It's up, I think, almost $80 from its lows, and the only reason why it's going up is because the writers had a writer's strike, and Netflix didn't have to spend any money on new content. So now that the writer's strike, I believe, is over now, so they're going to start spending money again. It's going to affect their profitability. So
Sure.
Some really interesting things happening. The TLT one kind of blew me away. I saw that this weekend. I mean, I knew we were out of balance. My jaw dropped when I saw that it was a 5-to-1 ratio.
Yep.
And that's how hard they pushed it. And my view is I think SPY is going to go down almost equal distance to TLT going up. So, I think they're going to probably meet somewhere in the middle there, get back into balance. Maybe even did a little bit of the higher end on SPY. But, you're looking at double-digit losses in SPY next year and double-digit gains at TLT. And I think that's a pretty good trade. And again, if you want, it's interesting. One of our customers actually was asking about it this morning. But, I do TLT and I overwrite on it so I could pick up income, but there's a TLTW out there that actually the professionals do it for you. I do it differently because of the mix for taxation, but if you don't care about getting the dividend and paying the dividend yield, you can get almost a 12%, a little bit more than a 12% yield right now on TLT, which is pretty amazing.
Is that higher than a TLT dividend?
Yeah, what it is the overwrite gets rolled into the dividend. So the cash they generate from selling the calls, Phil, they roll it in and they pay it out to you as a dividend. So the TLTW is a construct. and you're buying that construct, and they pass it out as a dividend to the investors. I think right now TLT is paying out a 28-cent dividend, and then plus the overwrite. And usually for me, I overwrite 1,000. I have 1,000 shares, and then plus the dividend. So I've been doing about $1,200 a month by doing this strategy. I've been doing this now for the last 18 months. Doesn't really matter the price. It's a pretty good strategy. And I think probably TLT bottomed here.
Yeah, I think reclaiming 88 is key. And I think when the SPY TLT trade starts to roll over into a sell, because it's pretty obvious that that declines pretty hard into recessions. And so I think maybe we'll talk about this later, but I know this is a monthly chart, but if we dial down to maybe a daily chart and we see like the daily sell signal on our TradeForce template fire off, that might be a very, very important signal here as we start to move into 2024. So we'll keep tabs on that, I guess, and let you guys know.
Yeah, and if I can interrupt you, Phil, I did look at the daily today too, and it topped a couple days ago. This move got to like 5.20 or 5.40, and now it's down just to 5.02. So there are, I think with that move with TLT, you see coming at some point, if that keeps getting stronger, institutional money is going to go with the no-brainer trade and just throw that thing right over there and just sit and sit quietly and let the markets pull back. So yeah, so I'm watching it daily. Maybe we'll talk about it some more. And guys, tomorrow, check in with us. We're going to be offering something new at Trade Genius that'll be free that I think you guys are going to really like. And I don't have it quite set up yet, but I'm going to share with you tomorrow, and it should be ready to go by the week after Thanksgiving. And I think you guys will like it. So with that, Phil, that's all I have today.
All right, guys, well, let us know your thoughts. Do you think it's time for the recession trade where SPY goes down and TLT goes up? We'd love to hear your thoughts on that. Otherwise, check out our stuff over at tradegenius.co. We are running our Black Friday specials where our specials are at the deepest discounts of the year. So we encourage you guys to check that out. All right, Bob, thanks so much. Appreciate you guys watching. See you guys on the next video. Take care.
Trade Genius.